Get the latest on what's going on this earnings season, meets, beats, and more in Zach's Earnings Scorecard.
Well, the Q1 earnings season is here. It kicks off today, April the 11th, after the market close, when Alcoa reports. That's the normal kickoff stock. It's when everybody starts to focus on a particular earnings season, even though earnings come out regularly after the typical season is finished with on the calendar. But Eric Dutram, who is the editor of Zach's Surprise Traders, here with me to kind of talk about three stocks that are going to be reporting at the beginning of this earnings season. One of them is Alcoa. And are all three of these reporting after the close today or spread out through the week?
So we've got three stocks we're going to look at that are all reporting this week. Alcoa does headline things for the three we're going to be talking about today.
Yeah.
It's a number 3 rated ranked stock. It's got a B for a VGM score. But if we look at some of the recent numbers, we get more of a picture about Alcoa. Alcoa has actually been performing very well this year, largely thanks to the turnaround in the materials space. But if we look to the recent earnings estimates, we can see a nice trend here that's going down. And this is kind of contrary to how the stock has actually been performing lately. So, kind of a juxtaposition of declining estimates, but an improving stock price. But interestingly enough, all the most recent estimates for the stock for the current quarter, they're actually a lot higher. We currently see a Zach's earnings ESP of 100%. So the most recent estimates are looking for 4 cents of earnings, despite the consensus being 2 cents a share. Now, Alcoa has a very mixed outlook in the most recent earnings reports. Mm-hmm. It beat last quarter, but right before that, two misses. So it's going to be probably a volatile start here for earnings with Alcoa after the bell today.
Okay, and for those who may not know, maybe looking in for the first time, ESP means it is set for a surprise.
Well, you need a Zach's rank 1, 2, or 3 and a positive earnings ESP, expected surprise prediction. And it doesn't guarantee a beat by any means, but looking at our 10-year back test, there's an 80% chance of a beat. So there's definitely some strong momentum here behind this pick, and I think it's really helped by expectations sliding really far, and then this most recent estimates going higher. So hopefully expectations will be just low enough for Alcoa tonight after the bell.
Okay, what else you got?
Well, next up we have Bank of America. This is a number 5 rated stock, so we're already in the bottom 5% here. And then big banks are actually ranked pretty poorly from an industry rank look, bottom 10%. So not a great start for Bank of America. They report on Thursday. Mm-hmm. The company and really the space at large is really hurt by this declining number of interest rate hikes that are built into the outlook. We started this year with about 4 being priced in. Now we're down to 2, and I think a lot of investors out there are questioning that. And I think analysts are really questioning that too. If we look to some of the recent charts here, we can see that for recent earnings estimates, look here, we've got 11 revisions for this quarter in the past 60 days, and 100% agreement lower. So basically every analyst says, hey, Bank of America, they're going to have a worse outlook this quarter. We got to ratchet down our expectations. And if we look at the magnitude of these revisions over the past 2 months, we've seen a huge cut, down 26% for the current quarter, and down about 8% on the full year. So the lack of interest rate hikes from the Fed that people are pricing in now, that's really having a negative impact on stocks like Bank of America. It's a number 5 rated stock, and it's got an F for VGM score. So I think investors should probably stay away from this one this earnings season. It's not really looking that great, and I think we need some more clarity from the Fed before jumping into these banking stocks.
All right. And then you've got Delta, right?
That's right. We've got an airline stock as the last one to look at this week. This also reports on Thursday. Very interesting trend in the airline space. Obviously, oil has come down pretty far, but it started to tick back a little. In the last couple of weeks, we're at about $40 a barrel right now. This is a big move down from 25, which we were at earlier in the year, but still very low compared to the prices we saw of $60, $70 a year or so ago. So this has really helped the airlines, really helped their profits, because fuel is obviously a big part of their costs. And we can see this in some of the recent earnings estimates for Delta. We can see a nice trend here over the last 90 days. We've gone from a consensus estimate of $1.14 up to $1.30. We've seen a similar trend in the current year. Nice increase over the past 90 days. But in sort of the opposite trend from what we saw from Alcoa, the most recent estimates, they've all been kind of lower here. So we're seeing a most accurate estimate of $1.27 versus the full consensus of $1.30. So, maybe expectations have kind of run up a little ahead of what Delta might be able to offer. And I know, we're gonna see. We sort of saw that last quarter, where Delta actually missed, and it was one of their first misses in a little bit of time. They had 3 straight beats right before that. So this could be a company where, maybe expectations have run up a little high, and they might not be able to deliver. It's kind of a shaky pick. It is a number 3 ranked stock right now. It does have an AVGM score. I definitely look to see if they say anything about their hub in Seattle and how they're going to compete with Alaska now that Alaska is planning on merging with Virgin. So that'll be something to watch. But I think airlines are really priced for perfection right now. So definitely take a look out for Delta on Thursday as well.
All right, thanks for previewing those for us. And Eric will be back throughout the earnings season to talk about more headline companies that are reporting earnings. So you may want to keep an eye on our website for more videos detailing the scorecard of some of these headline companies that Eric feels are important as they report. In the meantime, there's a lot of other earnings data and commentary on our website, Zacks.com. If you're not already there watching this video, get on over and check it out. With Eric Dutram, I'm Terry Ruffalo.